Everyone is talking about the steep drop in oil prices. Hi, I'm Amber Mueller, and today we've asked Jeff Winters, an energy analyst with ECI, to talk with us about this downward trend. Hello, Jeff. It's nice to see you again. Thank you for joining us.
Thanks for having me.
We've seen in recent articles regarding the possibility that OPEC may be trying to drive U.S. shale oil producers out of the market. Could this explain why the decline in oil prices has been so severe?
OPEC certainly has a lot to gain from a declining shale industry, but the overall decline of global demand also plays a huge role in the current oil prices.
What is OPEC currently doing about this situation?
When OPEC met on November 27th, they knew that there was a supply glut and that price was down, and they chose to keep production at about 30 million barrels per day. In November, they actually produced 30.5 million barrels a day, which is quite a bit more than they expected. The OPEC Secretary General said that they kept production high because they weren't certain that reducing it by 1 million or 1.5 million barrels a day would really affect the price.
Besides the OPEC nations, who are the top oil producers?
Well, Saudi Arabia is the top producer, and they are an OPEC nation, but the three after them are the U.S., Russia, and China. Before the recent slump, the U.S. was producing about 11 million barrels a day, occasionally producing more than Saudi Arabia, and it was thought that the U.S. would continue a production increase. The current price of around $57 a barrel has made many U.S. shale producers produce well under break-even points, which has dried up investments in the shale industry.
What about Russia and China?
China is slowing economic growth to work on environmental issues, and Russia is currently dealing with a problem with their ruble, despite following OPEC in resisting oil production cuts.
How serious is Russia's problem with its currency, the ruble?
Well, it's very serious, but many countries are seeing serious problems arise from the oil price reduction. China's rate of growth has dropped over 2.5%. Japan just went into a recession. The U.S. House of Representatives just approved a spending plan to avoid a government shutdown. And India's economy slowed 0.6% in the third quarter. Russia definitely has a severe problem with the ruble, but most everyone else is dealing with a severe problem as well.
Jeff, what would you say the biggest cause of the decreased demand in oil and petroleum products is?
It's hard to say for sure, but it's likely that the slowing global economy is going to be the number one factor once all the facts are known. When nations don't need as much oil and producers aren't slowing down, the supply glut will remain until something changes.
Is there any indication of when the demand for oil will recover?
As producers get tired of seeing low crude prices, they'll eventually produce less and we'll see prices recover once the surplus runs dry. It's unlikely that shale will be able to handle low crude prices, and it's possible that the U.S. government might step in and subsidize the shale industry to keep it alive. As far as when this will happen, it's very hard to say, but 2015 should be an interesting year to watch the energy sector.
All right, Jeff, we agree here that 2015 will be very interesting. For more information on the energy market, please visit sci99.com.